Well, we've come to an event called Russia's Bond Market Zooming In, and we're lucky enough to be able to speak to Alexei Mosiev. He's the Deputy Finance Minister of the Russian Federation. Thank you very much indeed for talking to Reuters today. All of this is all about bonds, essentially, and the Moscow Exchange will start selling Russian government bonds on an open international market. What is the deadline for this and the schedule, and how far have we come down this road?
This is something which really was being developed over the quite considerable period of time, but luckily now we are at the very end of this journey, and there's nothing to preclude Russian government bonds to be trading through Euroclear, Russian local government bonds to be trading through Euroclear starting beginning of next year.
So beginning of next year we start an open liquid market. Any more regulatory hurdles that remain, or are we just on the final hurdle?
Well, not as far as I know. Unfortunately, as we've seen in the past, many times when you think something is so completely sorted out, people start trading, and all of a sudden, oops, this little paragraph somewhere in the back book is still holding. But the intent was to really do an inventory of all regulation and change everything which we need to change to allow that the government bonds actually are traded absolutely the same way as the Russian Eurobonds. Starting beginning of next year, and we've done all that.
Okay, and how big is this market expected to be? What sort of valuation do you put on it?
Well, that's clearly the Russian OFZ market is the principal source of not only of the budget financing for the Russian government. As you know, the Russian government doesn't really have a history of large budget deficits, except for the last couple of years. But it's also a very big source of, it's a very important mechanism for the conduct of the monetary policy by the Central Bank of Russia, because that's the principal way, or the principal security Central Bank uses in its repo facilities. So the size is quite honestly I wouldn't recall. Sorry.
Well, some people say $50 billion of foreign investment. Would that be largely what you're thinking?
Even in terms of inflow. Well, yes, that's we don't have a specific goal in terms of how many investment companies, or how much money we want to attract for this market. What we do,
so what's the driver then? Is it to have a foreign, liquid, transparent market?
Well, there's a number of things. One, of course, we want to be absolutely free in choosing the debt vehicles which we use to finance the budget deficit, if we need to finance the budget deficit, between the domestic debt and external debt when we need to, and not take into consideration the infrastructural issues. So we want those two types of securities to be completely pari passu in the sense of, not in the legal sense, but in the sense of infrastructural treatment. Second thing is, you rightly said that it's very important to create a liquid and transparent market, which will become an important driver for foreign investors hopefully to come in and then invest in the corporate securities.
The other side of it is issuance. What are the plans? The numbers, what, $7 billion in 2013 and for 2 or 3
that
years
is, yeah, 7 billion is foreign debt.
Right.
Right. That is a correct figure. That's something what they currently budgeted for issuance. Figure for the Russian sovereign domestic bonds, so OFZ bonds, is much bigger. It's about 3 times that amount for each of those years.
So $21 billion for the next 3 years. Okay.
This is much smaller than what we've expected, what we issued this year. But at the same time, the government always has freedom to play between the domestic debt and the foreign debt, right? And that is something which is very easy for the government to decide, and the decision is taken every year.
So on the wider plane, if you like, capital flight, this is not a subject that is not known about. Is the bond market a way of preventing capital flight? We've talked about possibility of $60 billion coming out of Russia this year. Is that part of the grand plan, if you like, to prevent that, or not prevent it, but just cause it to be much more attractive to be in Russia?
Well, the way I view the capital flight is very similar to what we just said, which is that Russia saves much more than Russian residents save much more than they invest, right? Domestically at least, right? And one of the reasons why they don't invest, why this delta is invested elsewhere, is that the market infrastructure is not appropriate for that. So that is right. That's exactly why, one of the main reasons why so much attention is now being paid for improving the market infrastructure, creation of the comfortable and attractive facilities for the Russian corporates and the individuals to invest in domestic securities.
But you've also blogged then suggested that the flight currently is a sort of natural process and stops bubbles. So it's actually not a bad process. So you're trying to equate things or balance things up.
No, that's what I think. I don't see any contradiction in those things, because the current infrastructure, Russia simultaneously is really in need of a lot of investment to finance a lot of projects, especially on the medium-sized companies to fund their development. On the other hand, Russia has excess cash, right? And the problem is channeling one to another, right? So that's the problem, and that's infrastructure, right? So essentially, it's not that we have too much money, right? But we have too much money given the infrastructure capabilities.
Okay. Finally, I want to also get onto the GDP side of things. Things slowing down quite dramatically, 2.9% in the third quarter. That's quite a slowdown from 4% in Q2. Can you meet the target of 3.5%?
Yes, I think it's still entirely possible. I think that from the weighting is such that the bulk of GDP is produced in the first half of the year, so it's still entirely possible to meet the 3.5%. Also, the very recent figures, in particular the PMI figures we just received for October, suggest quite a sizable recovery in the manufacturing sector. So we hope that the Q4 is actually going to show some improvement on compared to Q3.
Okay, we will leave it there. Thank you very much indeed for that. That is Alexei Moiseev, the Deputy Finance Minister of the Russian Federation. I'm Nigel Stevenson. This is Reuters.